Hey guys, welcome back to the channel. In today's video, I'm going to be showing you guys a trading idea that I had regarding the Q's constituents. And what I'm going to be doing in the script is creating a ranking system based off of bullish beta and bearish beta. And I'm going to be longing the top bullish beta stocks, comparing that with the benchmark, and also seeing what the returns are like for the low bear beta stocks. I'm not going to go into detail about bullish beta and bearish beta, but in summary, my thesis is that bullish beta stocks will have a continuation to the upside, while the low bear beta stocks are more conservative and will probably produce less volatility. And I'm going to be taking the prior month's results and looking forward 1 month. So it'll be a rebalancing of a month-to-month basis. So if we start off with a script, we're going to require some packages, and I'm going to be reading the data for the constituents on the Qs. After I grab the tickers from that file, I'm going to get data from Yahoo Finance, merge all the adjusted closes together, adjust the column names to remove the dot adjusted. I'm going to be using ROC to calculate returns on a daily basis and removing any NAs. That's typically the first row. So I'm going to go ahead and load up this data. So from my returns, I'm going to be extracting the unique month from my data set. So this will be from December all the way to March. And I'm going to go ahead and pass that in to this function to calculate betas for each of the stocks on a monthly basis. And I'm going to be returning a data frame with the stock name, the bullish and bearish data, and the month. So let's go ahead and run this. And I'll show you what betas looks like. So we have 392 observations, and as you see, we have the bullish beta, bearish beta, the index month, and the stock name. And these are the betas on a month-to-month basis. So if I subset for Apple, we'll get December, January, February, and March. But since March has not ended yet, I'm just going to be using December through February. So back in our script here, I will be dropping March. So I'm just going to focus on December all the way to February. And that'll be my iterator for the index. And I'm going to be extracting the returns for those stocks with the highest bullish beta. So by passing in the indexes, I'll go ahead and subset my betas for that index month. I'll be ranking highest to lowest, and I'm going to be picking the top 5 stocks. I originally had 10 stocks, but saw that picking fewer typically made the returns a little bit better. Now that we have the betas ranked and I chose the top 5, I'm going to be using that data for the next month. So here I'm going to be picking the following month by just adding 1 to my index, gathering those returns, and I'm going to be using row means to kind of simulate an equally weighted portfolio, and that'll be my return. Similarly, for the bearish betas, I'm going to subset for the prior month, ranking these from lowest to highest, picking the lowest 5, and returning the portfolio returns the following month. So let's go ahead and run these two. And we're going to go ahead and plot year to date. So let's go ahead and take a look at the plot. So the black line is the benchmark. We have our high beta bull as the red line. And lastly, for the green line, we have the lowest bearish beta. So the returns do behave as expected. We would expect that the highest ranking bullish betas will continue to rise, while the lowest bear beta stayed relatively conservative. And as we see, the return for that portfolio is around 0. And from the script, you can go ahead and expand. For example, what would happen if we long the highest ranking bullish beta and short the highest ranking bearish beta and incorporate those returns. So just wanted to share this with you guys. I'll go ahead and leave a link down in the description area to my Patreon where you can find the script. Thank you so much for watching, and I'll see you guys in the next video.